Hey there, Scott Starace here with Prime Lending. Last week I wanted to show you the basics of what goes into your interest rate. And there's 7 different factors here, but this week I want to show you another aspect of what goes into an interest rate, and it's more elective. It's structuring your interest rate. So first and foremost, you may have heard that you can buy down your interest rate, which is paying points to get a lower interest rate. Well, the opposite is true as well. You can actually take a higher interest rate and get a credit, or what some would say, buying up your rate. Why would you do that? Well, first and foremost, you have to look at your goals. What type of property is it? Is it a rental property? Maybe you have cash flow goals. Is it a primary? In that case, it might be security. Every situation and every person might have a little bit different goals, so we want to take a look at what your goals are with buying the property. Second, what are your timelines? How long will you have the loan? Notice I didn't mention how long you're going to have the home. I mentioned the loan because people have homes a lot longer than they have the loan. And if we know it's going to be short-term or long-term, that's going to make a difference on how we structure your rate. If you have a short-term loan, then guess what? Why does it make sense to pay points to get a lower interest rate if you're going to be refinancing or selling that property later? We don't want to do that. Is it going to be long-term? Well, maybe that makes sense. So we've got to look at your timelines. That's also going to factor into the financial aspect. So we've got to look at the finances. How is your cash to close? Do you have excess assets? If so, then buying down your interest rate might be feasible. For some, that's not. And some, they need that cash. So buying up the rate and getting a credit at closing is going to be helpful to be able to get this property purchase done. What about your payment? Are you comfortable with a higher rate or not? Would you like a lower rate? We have to analyze that as well. And then finally, it all comes together with financial analysis. We're going to look at your timelines. We're going to look at the cash to close, your payments, etc., and then determine what's your break even. Is the difference in payment over the time period, does that make sense? And if so, then we have some solutions. And buying up your rate or buying down your rate might make sense. So, one more aspect of interest rates is structuring your rate. You want to go through this analysis to find out what makes sense for you. Have a great day.